So from where we are supposed to do?
Sir, actually, Priyanka asked, sir,
See, from where
when
we are
is the
from where we are supposed to do?
mm,
Hello. You remember from where we are
before I
supposed to do?
guess, sir.
Yeah.
Before, sir, I guess.
Which one?
Before,
You please check and tell now. What?
no idea, sir.
So you did not see yesterday's class even, Rajeshwari.
No, sir, no time at all.
Then if we are going like this, then when will you refer all this?
Hello?
Yeah. If we are going like this, then when will you refer the questions?
I will refer, sir. I'm doing this exam kit.
Okay, fine. Now, did we do this question? See, Priyanka has not attended this class now. So according to me, if she
No.
takes class today, then also she will not be able to follow up. Okay.
Actually, she messaged me, sir. That's why I was saying.
No worries. Like I will have a discussion with her regarding this. First, I'll share the videos. Then afterwards, I will go for the class because she may not be able to follow up. No, she did not listen from the beginning. Correct. Yeah. So if you can see the screen, you just confirm. Did we do this component instruments class yesterday? Equity and debt component.
Yes, sir, this one we
Yeah,
did,
fine, finished. Okay.
I guess.
Did we do this
Yes, this
question?
is one.
This
Yes, sir,
question?
this one.
Oh,
Yeah,
okay.
yes, sir, this one we did. Yes, sir,
We
this
did
one
this
we did.
interest and all this also, no? I think we are supposed to do from here. Recognition of financial instruments, correct?
Sir, once can you scroll up? This we need to do, sir. This is all we didn't do. Till that sum only we did.
Yeah, see, disclosure is nothing but regarding the financial instrument, what kind of instrument it is, all the details should be given in the disclosure column.
Before, sir, before this.
Before this, interest, dividends, losses, and gains, I
Yes,
discussed
sir,
yesterday.
this one.
I discussed now this one yesterday.
Okay.
Okay, fine. If it's a investor, there's a investee. These are the two parties. Investee is the company in which investor has invested. Investor may invest in form of stocks or bonds. If investor invests in the form of stocks, then investor would get dividends. If investor has bought the bonds of company, investor will get interest. These both are
Yes.
investment income for investor and he will show in the statement of profit or loss. Now, for investee, the interest what they are paying is an expense. Will be shown as an expense in the statement of profit or loss. Dividends what they are paying would be deducted from retained earnings. Okay. And if the security is held by the investor, suppose he bought it for 100 and the security market value is 120. He did not sell it. So the change in this, the $20 would be shown in the OCI because it's a non-realizable nature income. Okay. Any change in the fair value will be shown in OCI. Is it clear to you?
Yes, sir.
Disclosure of financial instruments. I am explaining that they will give all the details in the footnotes regarding the nature of the financial instrument, whether it's a for investor, it will be an asset. So he will be showing like where in which company he has invested, how many shares he has, or how many bonds he has, what is the interest he is getting from the company in form of coupon payments, and what kind of bond it is, coupon bond or zero coupon bond, or like all the things regarding that he will be mentioning in the footnotes.
Okay, sir.
Recognition of financial instruments, of course, will be showing the, if it's a equity investment, will be showing in the SOFP. If it's a bond investment, will be showing in the SOFP. This is from investors' perspective. From the like company which has borrowed funds, long-term debt or share capital, if it's an equity instrument. Okay. Initial recognition will be in the statement of financial position. And financial instruments are not like, and these what we are discussing should not be in these categories. investment in subsidiaries, associates, joint ventures, and joint arrangements. We are discussing about general investment, which is not any kind of investment of the magnitude or value of, like, suppose if a company A invests 60% in company B. So these two would be called as what? Parent and subsidiary. We are speaking about the investments which are less than 25%. That is, which is not of associate category also. So like these are like 8 to 10% investments if some company does in another company, like LIC. LIC is a very big company and they invest in various companies. They take 6 to 8% stakes in various companies. So these are general investment. We are speaking about these kind of investments in this chapter. Okay.
Yes, sir.
And yeah, here, like, probable economic benefits, all these points are not there. If it's a contractual, if there is a contract between two parties regarding any kind of investment or borrowing, then that will be recognized as a financial instrument. When you will be selling a stock or a bond, it will be derecognized, and any kind of profit or loss will be shown in the SOPL, gain or loss. Okay. If it's of a realizable nature, change in the value of the asset, of course it's a non-realizable nature gain, will be shown in the SOPL. Once you sell the asset, enough, now it is not existing with your company, and definitely whatever the gain or loss should be shown in the P&L, and that day itself it gets derecognized. We are discussing about the classification of financial assets. We are discussing about three things: amortized. So finance, as per the IFRS 9, financial assets are classified as measured at either. That means they will measure the financial assets either at amortized cost or fair value through OCI or fair value through P&L. Now, you may be knowing about amortized cost. When we take a loan, a housing loan of 40 lakhs, for example, we want to repay that in 30 years. We will be paying EMIs, na, correct?
Yes.
So this loan, whatever is of 40 lakhs will be divided into easy monthly
30 years.
installments. So can we say this is nothing but amortization of that loan?
Yes, sir.
Equal amounts divided, okay, over a period of time.
Yes.
So if
Yes.
company borrows money in form of bonds, that will be shown at amortized cost in the statement of financial position. That
Yes.
means whatever the bond amount, suppose it is 1 million. So in this will be repaid in form of EMIs. EMI is a combination of principal plus interest payment. So interest payment, you know, that it will be an interest expense, and the principal element will be deducted, and you'll be getting the outstanding liability of next year. Again, on that, interest is charged. In that way, they will be showing this in the statement of financial position, and interest will be shown in the P&L as a expense, and cash payment from the cash account will be paid. That will be deducted from that. So balance sheet will get tallied. If the here, what kind of security it is, we have to first understand the nature. The nature can be understood with the entity's business model. What is entity's business model? See, securities are of three kinds: held to maturity, then held for sale, and one is the trading securities. Securities held for trading purpose. If at all you hold a security till the maturity date, that means till the maturity, that means you don't have any intention of selling it. And here I am speaking about bonds. Let me be very clear. I'm not speaking about stocks. Stocks do not have maturity dates, correct?
Yes, sir.
Do you think stocks have maturity dates?
No, sir.
No. So bonds have maturity dates. They are held till maturity. So we will be showing these kind of securities with at what cost?
Amortized cost.
Amortized cost. When I'm speaking about held for sale, we will be holding it for some period of time, the security, and after that we will be deciding it to sell. That means we are speaking about stocks and bonds. We can hold stock for 5 years and we can sell. We can hold bond for 5 years or 3 years or 2 years and then we can sell.
Yes, sir.
Trading purpose is solely for trading. That means you are selling it, buying and selling it. So
Yes, sir.
in case of held for sale, if you are holding it for 5 years, in 5 years the security value can increase. So any kind of increment in the security value and you earning any kind of income in that case would be shown in
P&L.
OCI.
OCI.
Why? Because it's of non-realizable nature, correct?
Yes, yes.
Trading purpose is immediately you want to sell if you get a customer. That any kind of profit or any kind of like extra income if you generate by selling it will be showing in the P&L. That's it. These are the three classifications. So now I'm taking you to the question of amortized cost and explaining you the concept.
Okay, sir.
Just read this. And here what we'll be doing is we'll be using effective interest method. So I will explain you what is this, okay? Instead of reading all this,
Yes.
I'll make it easy for you. Come on, read this question.
Okay.
I have 2 weddings to attend
Yes, sir.
after your class today.
Oh, okay, sir.
My student's wedding, 12 years, she studied it in my academy actually.
Okay.
Her wedding, then one more wedding, Shamshabad.
Sir, then when you will go, sir?
I'm helpless, Rajeshwari. I'm having very bad time. You won't believe I'm fed up with everything in my life.
Even me,
My
sir. Till 4.
responsibilities I can't live. Those are my priorities. Your studies, your education are my priority. And
Yes.
I can't skip that also. The family
Yes.
relations. See how I'm stuck. And
Yes.
by side, my house is getting ready. I'm about to shift in a week's time. 5th year, my rental
Okay.
agreement is like about to end. So I need to vacate. See, I
Okay.
don't know what to do in my life now.
Oh,
I've sent my parents and madam to those destinations. Now I have to go.
okay.
What to do?
Even I had a really hectic day, sir, today. Till I think 3:34 to fully continuous classes
And why I
from
did not
morning
take
9.
your I did not take your class, 2 reasons. I'm having cough and cold, and yesterday was my marriage anniversary. Okay.
Oh, belated happy marriage
Thank you, Amma.
anniversary,
Thank you so
sir.
much. But I was yesterday. I was about to take your class and go somewhere else. But what happened? I cancelled. Why?
Yes.
Because everyone came home. So yesterday,
Yes.
some 2 weddings are there in our family.
Okay.
So madam's brother and madam's sister's husband, all like those family, they came from Kolkata. They bought all
Okay.
sweets from there. Okay. They
Okay.
wanted to give us surprise. They 1 o'clock they came to our home.
Oh my God.
They had come to the weddings, how the where there is wedding now. It's like near
Yes,
to
sir.
Aramgarh Chaurasta, Samshabad. They left all their
Okay.
luggage and they wanted to give a surprise. So they
Oh,
took a up down cab. Okay.
okay.
Papam spent 2,000 rupees.
Oh
Came
my
here,
God.
that cab guy took the up money and told I will wait. And these guys,
Okay.
when they wanted to go and take the cab outside, that cab guy went
Oh,
away. Directly
oh
from
no.
airport, they did not eat even anything. Then 5 cabs they were booking, but they were not taking the destination. They were canceling. I had to take them to the house, 28
Oh
kilometers,
my
like your
God.
Maidipatnam, Toli Chowki, that area will take and go to Aramgarh.
Yes, sir.
Then 3:30 I slept there. You say, my life, what to do? This is
3:30.
the problem.
Yes, sir. Huh?
So you read it, Amma, this one?
Yes, sir. Yes, sir. Right, sir.
2 minutes, 2 minutes. Priyanka is messaging actually.
Yes. Done, sir.
Yeah, 2 minutes.
Okay, sir. Yes, sir.
Understand this question. On 1st
Yes.
Jan, like, just a second, Rajeshwari.
Yes. So this is a fair value. So 1,000 principal fixed interest. This is the interest means
I will tell.
finance cost, na, sir.
I will explain everything to you. See, on 1st Jan, Abacus company purchases a debt instrument for this much. This is a market value.
Yes.
Okay.
Yeah.
Debt instrument is due to mature after 4 years. Instrument has a principal amount of this much. So the instrument is bought at this value, and this much has to be paid. Okay, on maturity.
Yes.
Coupon company will pay this much, and the market, the rate is going on is this much. So 5-year
Yes.
term, sorry, Jan 1st, no? Then December, 5 years. Now, Abacus, like 100%, this is the liability and this is the coupon rate. So the liability,
Yes, sir.
so the interest payment is this. Okay.
Yes, sir.
But how much they should get as per 10%, they should get more. So we'll see the schedule. So this is the interest they should get is this. They're getting this much,
So
correct?
the amortized cost at the beginning of the year, like this is the balance forward.
In
This
this way, they will maintain.
P&L interest income is the finance cost,
See, I will
and
tell
this is
you.
the
See, listen.
interest paid and carried forward, na, sir?
Yes, yes. See, 4.72 is company giving, na?
Yes.
10%
Yes,
is
sir.
in the market. So this
Yes.
bond is a premium. This bond is a like company. They have bought the bond at $1,000, and they'll get how much?
Yes.
1250. Correct.
Yes, sir.
So when market interest rate is high, the bond will be sold at discount. So they bought at $1,000. They bought at
Yes,
$1,000,
sir.
na? It's a discount bond or a
Yes,
premium bond?
yes, sir.
It's a
Discounted.
discount. Why discounted? Company is paying
Because
less.
the value has decreased.
Market it is high.
Yes,
So
sir.
they bought it for this value, and they will get this. Okay. So
Yes, sir.
company needs to give this 250 difference also to the bondholders. This is called
Yes.
discount, and this discount is nothing but will be amortized. Amortization of
Yes.
discount. Okay.
Okay, sir.
So so how it will go is, they are supposed to get this one. This is my interest income. This is interest income for investors. Interest income is a combination of the interest paid and
Interest and
amortization
payment,
of
principal.
discount. Amortization of discount.
Yes. Yes, sir.
Got it, na?
Yes, sir. Yes, sir.
So here this is the amortized cost at the end of the year. Why? Because this is what the company is supposed to. This is what the
So this
investor
we need to
expects.
do, na, sir?
You need to
1,000
do,
plus
yes, yes.
100 minus 59, na, sir?
Yeah, I'm explaining this properly. This is what investors expect. This is what they are getting. This is what extra
Okay.
company is paying as a part of amortization of discount. That means they will pay this 1041, then they'll increase this value and they'll make it equivalent to 1250 on maturity. Got it?
Yes. Yes. Yes, sir.
Understood now?
Yes, sir.
Now please do the calculation. We'll move forward to next.
This one we did, sir.
We did not do.
Means like we have done in our Kaplan, so I know this one.
So if at
Yes.
all this is like, for instance, the market value of this bond increases to 1080. So first year it is 1041, na, amortized cost.
It has increased, so it will
OCI.
come in OCI.
Yeah, that's it. Yeah.
Yes.
Let's do one more question. We'll do equity instruments. Okay.
Okay, sir.
So after initial recognition, now the bond will be shown at this value now. That also you should understand, because you have recognized the income.
Yes.
After initial recognition, equity instruments are measured at fair value through P&L or fair value through OCI. Depends what kind of security it is. If it is for trading purpose, then this. If it's for held for sale, then this. Okay. It depends upon the
Yes.
intention, what intention company has. Please read this question. Discuss. Just a minute.
Okay, sir.
You are having holidays from when you said?
Holidays, no idea, sir. Like they're saying that they may continue some classes online.
Okay, fine.
But not means few classes online, but these presentations are going online. But if there is like any portion pending, Now even we have like two subjects or two subjects portion pending, so they will keep offline only. I need to go to college.
Okay. Yeah, read this question also, because
Yes.
if I need to wind up and revenue also I need to take taxation.
Yes.
Chapters are there. Some questions will solve also. So what is happening in February? A company purchased 20,000 $1 listed equity shares at a price of $4 per share. Okay.
Yes.
So 20,000 $1 shares at this. Transaction cost
Were
were this.
purchased for $4, sir.
Yeah, the company purchased this one, this value for this.
Okay.
Company purchased 20,000 shares. Okay.
For
$1 is the
$4.
listed value and they purchased it for $4. Yes, correct.
Okay.
Transaction cost also is there. This we will be deducting from share premium account. We'll see. Yeah. And
Okay.
actually this will be shown in the P&L only. We'll see how it goes. At the end, at the year end, these shares are trading at this. So you know when the shares are trading at this and you bought at this, then you will be showing the showing the P&L, na? Showing it in the P&L, correct?
Yes.
But when you'll
Yes.
be showing in the P&L?
For trading.
If it is a trading security, then P&L. If it's not trading, then
OCI.
OCI. That's it. So first case, we are considering it's a trading security. So any increment in the price will be going in the P&L. Dividend income P&L. Transaction cost deducted. Finished. Then
So
investment is,
5.
sorry,
4.0.
what?
5.5 is the trading. Okay.
It is
4 is
trading
the
right now at
change
this
per
price.
share.
Now,
Per
this is
share.
the,
Yes. Sir. Yes. Sir. Dividend
yeah,
income 20
yeah,
cents.
this
Yeah.
chapter is
Yes.
a simple chapter only, but this is a lengthy one. That's the only issue.
Okay.
Simple chapter only, na? Only
Yes,
understanding
sir.
the
Yes, sir.
treatments. Yeah.
Yes, sir.
Investment value will increase by how much? You'll be taking the current value. Okay?
30,000.
Because you recognize the income. Dividend income, profit or loss, and here it will going in the OCI, correct?
Yes, sir.
So this and this change and the transaction cost. Transaction cost. Why? Because no sales has happened in this case, na?
Hello.
If trading,
Hello.
hello,
Hello.
yeah, hello. Can you
Sir,
hear
can you repeat once again? I just
me?
got disconnected.
For in case of trading securities, it
Yes.
will be sold and the transaction cost would be incurred.
Yes, sir.
Here, transaction cost would not be incurred, na? Hello.
Why, sir?
You are not selling the security, na? You are holding it. Why are you
Sir,
showing in
can you
OCI?
explain? Gain.
Hello. Hello.
Yes, sir.
Why are you showing in OCI? What's the
Yes,
reason?
sir.
Yeah, Rajeshwari, I'm saying what is the reason to show in OCI?
We are getting gain on that instruments, no,
Gain,
sir.
because you are not selling it, you are holding it. It's a holding gain. Hello.
Okay, sir.
It's of non-realizable nature. We are not selling it now. So will you incur transaction cost?
No, sir.
No transaction is happening. You're just holding it. That's it. That's the reason why we added. Okay. What I'm saying, are you following? Hello. 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 Hello.
Hello.
Yeah, Rajeshwari, what happened? Your network?
Sir, can you hear me now?
I can hear you now. Yes.
Yes, sir. Okay.
The network is not good, huh? Today also.
I was answering. No,
But
sir.
I'm
Network is fine on
oh,
mine.
okay. So here we are
Yes.
not selling the stocks now, so there is no transaction happening. So we will add this transaction cost. We are not
Okay.
incurring it. Okay, we are not paying anything,
Oh,
and then you will be showing
okay.
this at this value because you already recognized.
Yes.
Subsequent measurement of financial liabilities. See, after initial recognition, all financial liabilities will be measured at amortized cost, which I explained you right now, with the exception of financial liabilities at fair value through P&L. That means these are like a different kind of liability. Okay, why?
Okay.
Because trading purposes, you what we say this in the case of liability, a bond can be sold, na, correct?
Yes, sir.
See, one company will be buying the bond. For them, it is an investment. One company is selling the bond. For them, it's a liability, na? Correct. So these kind
Yes.
of securities, they can sell it also. Like in the sense, I will explain you better by the way of question. 2 minutes.
Okay, sir.
So after initial recognition, all the liabilities should be measured at amortized cost. All the liabilities, with exception of financial liabilities at fair value through P&L. These should be measured at fair value, but where the fair value is not capable of reliable measurement, then cost. That means some securities are sold in the market, now they have a market value, correct? Hello, hello.
Yes, sir.
Some securities have a market value. If you have taken a normal
Yes.
loan from a bank, if you have taken a bank loan, then you will be going
Yes.
for amortized cost, correct?
Yes, sir.
If you have issued bonds, then bond can have a fair value, na?
Yes.
That time you will be measuring at fair value. If fair value is not
Fair
available, then
cost.
cost. Please read this question. I'm just waiting. If you have any day holiday, you tell me. I'll put a holiday in my academy and take full day class for you and wind up things.
No, okay, sir.
If you are having any day holiday, tell me, because evening
No
we can
full
do.
day, sir.
I want a morning 2 hour session, afternoon 2 hour session. That's it. You give me one day, enough.
One full day, sir, from morning to evening.
I said morning 2 hour session, afternoon 2 hour session, Rajesh. Enough.
Okay, sir. I will see, sir. Yes, sir. I will inform you.
Yeah, because evening we will utilize for problem solving. That is my motive.
Okay.
So Galaxy company issues a bond for this on 1st Jan. No interest is payable on the bond, but it will be held to maturity. So you understood now, amortized cost, correct?
Yes, sir.
It is the amortized because held till maturity
Yes.
and redeemed at this. That means you are issuing the bond at this value and will be redeeming this. So it's a discount bond, now.
Yes, sir.
Bond has not been designated as at the fair value through P&L. Why? Because it will be held till maturity. So this will be at amortized cost.
Yes.
Effective interest rate is 6%. Calculate the charge to profit or loss in the financial statements of Galaxy company because it's a liability. So they'll be showing us interest expense, what they'll be paying to the bondholders. So bond is a deep discount bond. Why? Because 6 lakh payment, what you'll be going to do, you are issuing at 5 lakh 3,000. It's a deep discount bond or not?
Yes.
And is a financial liability to Galaxy company. It is measured at amortized cost. Understood fact. Why? Because held till maturity. Although there is no interest as such. See, interest in the sense company has issued the bond at discount. They are issuing at, and they are saying that they'll redeem. But did they give any coupon here?
No.
No. Only effective interest rate is given. So it's a zero coupon bond. It's a
Zero coupon.
understood now.
Yes, sir.
So the difference between the initial cost of the bond and the price at which it will be redeemed is the finance cost. So suppose I issued a bond at, I have to redeem 100. I issued at 80. So the 20 is my finance cost. That will be my finance cost, correct?
Yes,
Because
sir.
this is what I'm supposed to pay.
Yes.
This is my cost. This is the investor's gain. Understood?
Yes.
So this must be allocated. So I will divide that. I will allocate that cost in equal amounts. That is called amortization. What's that called?
Amortization.
So this 20, if it is a 5-year bond, I will divide this 20 by 5. So every year I'll give $4 like this.
4.
This must be allocated over term of the bond at a constant rate on carrying amount. So we will apply effective rate of interest. Why? Because this is the desired income what investors want. They want 6%, which is prevailing in the market. So this is the one which will be giving to them every year. So this year's liability will be this amount plus the interest. Please go to that and just read this question.
Yes, sir. Okay.
Rajeshwari, I can take only till this video. I cannot continue after that today. I have to
What,
go.
sir?
No, once this ends now, 40 minutes,
Okay, sir.
then I need to go actually. Not be able to take.
I think more 20
More?
minutes is there.
No, we started at
20
9.
minutes is
We
there.
start 9:05 now.
No, sir. 9:05.
Yeah. Maybe Rajeshwari, I am not denying. I am ready to take till this time. That's it.
Okay, sir. Okay, sir.
Because I have to go. I said not 2 places. I don't. No, eating and all is secondary. I need to meet them. That's it. That's important.
Okay, sir.
So company issues 6% loan notes. It is one kind of bond. A nominal value is this. They are issued at discount, 5% discount, and 1700 is the issue cost incurred. So this will be, I think we have to deduct this from the share premium. They will kind of write off this, na? Preliminary expenses like that. Yeah.
Okay, sir.
Loan notes will be repayable at a premium of this after 4 years. Effective interest rate is this. The amounts will be shown in the statement of P&L and financial position at the end of year 4, like 4 years, like 1 to 4 years. So what we'll do, finance cost. How? We'll take the, what is that? Effective interest rate is how much? 6%, now. Company has
10%.
issued the loan notes at 6%. Sorry, this is the effective interest rate. And
Yes.
what kind of bond this is? Tell me. 6% company is paying. Market 10%. It's a discount bond.
Yes, sir.
So amortization of discount will also be there. So we will see the interest payment done. So 2 lakhs into 6%.
One second, sir. Doing.
No, that is interest payment. I want interest cost now. 10% is the effective interest rate. So we will apply that 10% only. First deduct 1700. Let's see.
From 2 lakhs, sir.
No, just a second. $10 premium. That's what I was saying. Yeah. See, this is a 2 lakh company has borrowed, na?
Yes, sir.
That they have to repay. And what is that? They issued at 5% discount. So remove 5% from that. That means you'll take 95% of it.
Yes, sir.
Minus the transaction cost. Issuance
So
cost,
2
sorry.
lakhs into 5%, na, sir.
2 lakhs into 95%. You take 5% and do minus, subtract, or you take directly 95%. Na? It will be all right.
Sir, I didn't get it, sir.
See, 5% discount means 95% original value.
Yes, sir.
So then take it now and subtract this.
2 lakh into 95%, 1,90,000
Minus
minus 1,700. 1,88,300.
on that 10% is the finance cost, correct?
Yes,
Combination of
18,830.
Yeah, combination of your interest payment and amortization
Yes,
of discount, correct?
yes, sir.
So interest coupon payment is this now
Yes,
6%, and the difference that settled will be added to this. Now your liability is this first
yes,
year. In that way, second year again
yes,
interest, that same thing will be continuing for 4 years. Okay.
yes, sir.
Then what will happen in the last year? They will be making full payment, 2 lakh 20. They are paying it at premium itself, 10% premium after 4 years. So last year they'll
Okay.
pay 2 lakh 20, and your finance cost will be balancing to that, because this won't change. This is always fixed, correct?
Yes, sir.
Understood, no, Rajeshwari?
Yes, sir. Yes, sir. This is fixed.
Finished. Just see this, and let's like move forward.
Sir, can you once scroll down? Yeah. Cap prepaid.
Getting important actually.
Yes, sir.
Where will they show time?
Down, sir.
Where?
Means, sir, in Zoom.
Huh?
No, sir. Zoom in. It will like automatically cut off.
Okay. Okay. Fine.
Like we can see that from when did you send this mail?
No problem. No
In the
problem. Leave it. Leave it.
Zoom link.
No issues. This main things are done now. Now something here. This is done. This is done. Explained.
Nine.
Initial measurement. Some more things are there, Rajeshwari. I think
Okay, sir.
one 30-minute session is enough for this. Just 30 minutes. Because all the things I mentioned now, business model test and all, like you will be,
Now, what, sir?
no, 30 minutes more required. Tomorrow I can wind up this one. Finish. And I will start that also
Okay.
tomorrow. Revenue or taxation, what do you want tomorrow?
Uh, Revenue, sir.
Taxation done for you
No, I guess.
in college.
No, sir. Taxation and this impairment. Impairment. These both are left.
In
EPS done today.
what done? EPS.
EPS today
EPS,
done.
however, we did very well, na?
Yes.
That all the retrospective effect and all those you understood, na? Got it, na?
Yes, sir. A bit.
In Kaplan also they're giving those questions.
Not much. So like the problem, the way they do the Kaplan,
Hmm.
it's like totally different. Like it is not like like clearly solved. So our madam, she'll explain nice only, like she explain each and every point.
It's a format based, huh?
No, sir, not format.
Don't know
Not
EPS
format.
calculations already, like we did not.
Like like each and every sum, ma'am will like take the pic, like screenshot from the Kaplan textbook,
Uh,
and she will do it in the like Excel sheet like type of.
acha, okay.
Yes, each and every bit clearly she will do. If we can copy at the time, okay, we can copy. She will give you
She's
one
a
time.
chartered accountant, no? What?
No, sir, like she like didn't do this final, it seems.
Acha, okay.
Yes, but she studied CA. She got.
Okay, fine.
She explains really nice.
Okay. So you understood this all, na? Finished?
Yes, sir. Yes, sir. This one done, sir. Understood.
So we will continue this leftover part tomorrow. I'll finish this
Okay.
and I'll start revenue also tomorrow. Okay.
Okay, sir. Okay, sir.
Revenue 30th and 1st. Revenue would
Okay,
be
sir.
done. If you are taking holiday, you tell me, both I'll wind up in a single day.
Yes, sir. Sure, sir. I will inform you.
Or else like taxation madam will take. Okay. So I will not
Sir,
take tax.
you explain us, sir.
Your wish, okay. I'll take taxation. No problem.
Yes, sir.
Because I want to start revision now. That's what I'm saying.
Yes, sir.
So if she takes that, I can explain you the questions now. Like, however, one or two questions would come from taxation.
One day only, na, sir. You
Okay, then fine.
explain.
Okay, okay, Rajeshwar. Fine.
Yes.
Tomorrow we'll put an
Yes.
end and we'll do revenue. Okay. Fine. Yeah.
Yes, sir. Okay, sir.
Thank
Thank
you.
you, sir.
Thank you. Thank you.
So shall I leave the meet?
What am I?
Shall I leave the meet, sir?
Yeah, I'm ending. Yeah, I'm ending. Yeah. Thank
Oh,
you. Thank you.
okay, sir. Thank you, sir.
Thank you.